So home prices are increasing again. Hey there, and welcome back to Bald Prairie Real Estate. My name is Matthew Pfeifer, real estate agent in Regina. That's my trusted assistant, 𝗤𝗲𝗏𝗀. This is the weekly news recap going through the most interesting Canadian real estate related news topics where I give you my thoughts and opinions on them. We're going through the Canadian Real Estate Association stats because home prices, they're on the rise again, and that is not typical for this time of year. We're talking about why. But of course, we got to start off with another one of my terrible bad dad jokes, and this one comes from a viewer. Did you hear about the 4-foot-tall psychic that escaped from prison? It was a small, medium, at large. Thank you, Sarah, for that joke. If you have a terrible joke, put in the comments below. Let's get into this week's real estate news. Stats Canada is out once again with the newest inflation numbers, and they're better than expected, continue to trend down. The expectation was that we'd see inflation around 1.8%, and it came in at 1.6%, so beating expectations again. Now, the core metrics, that's core, median, core trim, the Bank of Canada likes to look at because that kind of removes some of the volatility from the headline number. That still remained around 2.3%, so not much change there. Now, what is interesting is that the month-over-month numbers, again, for the headline, saw 2 months in a row now, we've actually seen not inflation, but deflation, 0.2 and 0.4% respectively. If that continues, that may accelerate the Bank of Canada's plans to cut rates even further than they already have. Shelter costs continue to be the biggest drivers of inflation right now. Rent is up 8% year over year. Mortgage interest costs are up 17% year over year. I expect those numbers will drop off quite dramatically as we get deeper into this year and then into early next year, as we've seen rent kind of peak out, especially in the bigger centers. We're even seeing it drop. And then we're going to see the cost of mortgage interest fall off because the impact of rate cuts will really start showing up in that data. Because again, inflation is year over year change. The betting odds right now, the Bank of Canada cuts interest rates by 50 basis points next week, is now up to 70%. Fast pause here. You're ready to buy a house, but you don't have a great real estate agent. Don't worry, I can handpick one for you from my great network of agents anywhere in the country. If you look in the description of this video, there's a link to my calendar where you can book me for an agent consultation, and I'm going to find you the perfect agent. Speaking of the Bank of Canada interest rate cuts, National Bank thinks there's some significant cuts still to come. National Bank is forecasting the Bank of Canada will cut interest rates by 1 full percent before the end of the year. So that would mean they'd have to cut 0.5% next week and 0.5% in their December meeting. That would bring their overnight rate down from 4.25%, which it is now, to 3.25%, putting it in the range what the Bank of Canada calls the neutral rate, meaning it doesn't stimulate or doesn't restrict the economy. That means for those on variable rates, you'll likely see those drop to around 4.25 to 4.5%. You can say that's usually a 1% to 1.5% spread from what the overnight rate is to what people pay on those variable rate mortgages. And I've been talking now for quite a while that at some point, we're going to see a flip when it comes to interest rates. Generally, variable rates are lower than fixed rates. We've seen now for a year and a half, that variable rates have been higher than fixed rates. So I said at some point, that's got to flip. Variable rates got to come down. Fixed rates may come up, most likely a combination of both there. If we see the Bank of Canada cut by 1% through the remainder of the year, we're going to see a very good chance that variable rates, or at least even with fixed rates, and potentially fall a little lower. When you go with a fixed rate, generally what you're paying for is some stability, and that's why they're typically higher. Way back in January this year, I forecast the Bank of Canada will cut interest rates 1.25%. So if they do cut a full percent, I'd be a little out. They'd be 1.75% of cuts through the course of this year. That would mean those that are on variable rate mortgage payments that are buying or currently have the average house in Canada would see about $300 to $400 a month in savings from the start of the year to where the year ends. So that's starting to get fairly significant at that point. Let's get you up to speed on this week's best mortgage rates available. I think you can call this the calm before the storm because I think everybody's expecting the Bank of Canada is going to cut interest rates next week. So all of this will change, but not much change this week. Let's dive into it. Starting off with insured mortgages, the best 3-year rate was 4.19. That's a drop, and it's through Meridian. The best 5-year fixed rate I could find, 3.99. Yes, a rate below 4% for the first time this year. That is through ATB, and of course a drop from last week. When it comes to variable rates, the best adjustable is 5.45 through Marathon, unchanged. The best static, 5.32 through Manulife, also unchanged. On the insured side of things, the best 3-year I could find, 4.59 through Desjardins, that is a drop. The best 5-year fixed, 4.39 through ATB and Desjardins, that's a drop. For variable rate mortgages, the best adjustable, 5.95 through First National, unchanged. Best static, 5.6% through Desjardins, also unchanged. When it comes to Big Five banks, the best insured 5-year fixed rate I could find, CIBC, 4.34, unchanged. BMO, 4.45, unchanged. TD, 4.49, unchanged. RBC, 4.74, unchanged. Scotiabank, 4.79, unchanged. As always, the lowest interest rate isn't always the best mortgage. That ATB one that is below 4% is highly restrictive. So make sure you know exactly what you're getting and not just the lowest rate. Next up, let's go through the CMHC housing start stats. The government's goal is to see about 6 million homes built before 2030. In other words, about 875,000 per year. And unfortunately, CMHC has stopped tracking housing completions back in 2022, and that frustrates the heck out of me. So all we can go by is housing starts, and that's kind of a terrible metric because not all housing starts become housing completions, but that's what we got to work with. So we need about 875,000 homes completed, and our best year is about 275,000 in Canada. What are we at right now? About 220,000. And that's trending down.
The Right Honourable Prime Minister.
Mr. Trudeau, Mr. Speaker.
It was about 260,000 this time last year. I have a feeling before the year is out, this number is going to drop below 200,000 starts. So we are nowhere near the 875,000 starts we need in 1 year, let alone doing it 6 to 7 years in a row. There are very few guarantees in this world, but I'm going to put it on video right now. I guarantee the government of Canada is going to come nowhere close to getting those 6 million homes built. And if by some miracle that happens, well,
if you guys ring in and get this one, I will die.
So somebody bookmark this video and we'll come back to it in 2030 and see how close this guarantee comes. Let's talk about this TD forecast where they're expecting a sizable increase in home sales to end the year. TD is calling for what they say is a sizable increase in sales from Q3, which is what we just ended, to Q4, whereas we're going to end the year. They've got a couple of reasons why. First off is that we're going to see more rate cuts, may spur more demand. The longer amortization periods and the change in mortgage insurance premiums will have a bigger impact in Toronto, Vancouver, where their sales are down. And of course, when those jump up and down, has a major impact on the national numbers. They're also saying that they expect that because we haven't really seen a lot of buyer activity come from the rate cuts we've had so far, and typically we'd see a little bit bigger impact, that eventually those buyers will get off the fence. I think that it's going to take that full 1% or more to really move the needle for most buyers. I don't think most, for a quarter point here and a quarter point there, it changes their buying decision. 1% or more probably does. But I can tell you, we're already starting to feel some of this. Talking to my friends in Toronto, they're saying that it's picked up a fair bit there. And I saw that they had one of the busiest weeks for home sales this past week. Now, again, it's just 1 week. It doesn't make a trend. But seeing this past week being one of the busiest weeks for the year, that's not typical this time of year. We'll have to see if that continues. I showed it in my monthly market update. There was as well a little bit of a bump in sales in the Toronto market and a few other markets across Canada. If you haven't watched that video, I'll put a link to that in the description, and those pop-up cards will come out, and get subscribed so you don't miss the next one. We'll see if that translates into the sales next month. Let's go through the monthly Canadian real estate stats that just got released. Quick run through the highlights here. Sales up 2% month over month, up 7% year over year. New listings are up 5% month over month. The benchmark price unchanged month over month, down 3% year over year. And the average national price is up 2%. Diving deeper into the numbers, starting with sales, you can see that this past quarter was better than both last year and the year before. Now, that's not saying too much because those were both basically record lows for sales, but it's trending up. If you look here on the chart, you can see that sales are trending back towards that long-term average, still well below it, but that's not typical to see sales trending up this time of year. When it comes to new listings, there's about 185,000 new listings. That's up 17% year over year, but still below the roughly 200,000 new listings we would typically see looking at the long-term average. Sales new listing ratio is another good metric here to go through. That is currently at 51%. Previous month, it was 53%. Long-term average is 55%. So we're just barely below the long-term average. And generally, most people expect between 45 and 65% sales new listing ratio would be considered a balanced market. So we're square in the middle of that right now. well. When it comes to home prices, you can see nationally that composite benchmark price is basically unchanged all year long. Average price, though, trended up. Now, 1 month doesn't make a trend, but again, seeing prices trend up this time of year, not what we would typically expect. Usually things are kind of softening off. There might be a little bit of a bump, but this is a little bit unusual. When you look at it province by province, you can see that every single province in Canada, except now BC, has seen year-over-year price increases for average price. BC being just a little bit below even Ontario now, basically even year over year. That's a whole lot of data. What does it all mean? I'm gonna try to wrap it up kind of in a couple of sentences here real quickly for you. First off, there's been a lot of forecasts recently about sales activity picking back up, and we're starting to see some early signs of that now. I'd say a busier fall market and maybe a busier spring market, that's looking more likely now. Those that are expecting the crash to happen in just a few months will probably continue to say the crash is just around the corner. I see all of you in the comments. That outcome seems to be looking less likely now based on what we're seeing in the data. Now I want to turn it back to you guys. Let me know in the comments below. Was this just kind of a 1 month anomaly with the average price jumping up? And what about sales? Will that continue to trend up, or is that going to fall off here? Maybe we're not going to have a busier fall market and a busy spring. Let me know in the comments below. Watch this video right here, which is my most recent monthly Canadian real estate market update. Some great insights there. As always, if you like this video, please give it a like, and thanks very much for watching.